You've probably seen the crypto market crash.
Bitcoin has now erased all of its gains since President Trump's inauguration as forced liquidations accelerate, volatility spikes, and risk appetite fades across the market.
Maybe you watched your own portfolio get cut in half or saw headlines of digital fortunes vanishing overnight. It feels like chaos, like a digital casino where the house suddenly decided to flip the table. But what if it wasn't chaos? What if it was just business? See, we're told crypto is about decentralization, about power to the people. But from the very beginning, this new world of digital money wasn't just started by humble cypherpunks. Right from the beginning, there were alliances. Alliances between some of the most powerful people in technology and the most powerful people in politics. And those families would rather stay under the radar. But this is the story of how one of those alliances was built. It's a story about a president, a pariah crypto king, and a deal with a foreign kingdom. It's the story of a new technology that's being leveraged for the oldest goal in the world: absolute power. And it all starts with a man who claimed to hate the entire thing. Donald Trump was not a fan of crypto. In 2019, he was famous for his tweet calling Bitcoin and other cryptocurrencies not money, highly volatile, and based on thin air. He even warned that crypto could be used for illicit activity. For years, he was the face of the old money establishment, the real estate mogul who believed in concrete and gold, not in digital code. But then something changed.
This afternoon, I'm laying out my plan to ensure that the United States will be the crypto capital of the planet and the Bitcoin superpower of the world, and we'll get it done.
After leaving office, Trump dove headfirst into the one part of crypto he seemed to understand: digital collectibles. He released his first official Donald Trump digital trading card collection, NFTs of himself depicted as a superhero, an astronaut, and a cowboy. The media laughed, the crypto world cringed, myself included. But Trump laughed all the way to the bank, making millions of dollars. He was testing the waters. He realized that his brand didn't just sell hats and rallies, it could sell digital assets. He released a second set, then a mugshot edition, and as his 2024 campaign ramped up, his entire tune changed. Suddenly, he wasn't just selling pictures, he was positioning himself as the crypto president. He hosted meetings with Bitcoin miners at Mar-a-Lago. He rallied against the Biden administration's attempts to regulate the industry. He even made a historic move. His campaign became the first ever presidential campaign to officially accept donations in Bitcoin, Ethereum, and other digital currencies. It was a brilliant pivot. He turned an industry he once called a scam into a core part of his political identity. But was this a genuine change of heart? Or was it a sign that he and his inner circle had found a much deeper, much more powerful way to use this new technology? This new pro-crypto stance looked like a simple political calculation, but to understand what was really happening, you have to look past the rallies and the NFTs. You have to look at the companies he was suddenly very, very quiet about. While Trump was building his political brand, the biggest king in crypto was about to lose his crown.
The former chief executive of the world's largest cryptocurrency exchange, Binance, was sentenced on Tuesday to 4 months in prison after pleading guilty to violating U.S. anti-money laundering laws.
Jinping Zhao, better known as CZ, was the founder and CEO of Binance. If the crypto industry was a country, Binance was its capital city, its central bank, and its stock market all rolled into one. It is the largest, most powerful crypto exchange on Earth, handling trillions of dollars in trades. But just like the old world robber barons, Binance's rise was not clean. For years, the US Department of Justice had been building a case. They alleged that Binance was a hotbed for illicit activity, that it had knowingly processed transactions for groups, child, and users in sanctioned countries like Iran and North Korea. The company was accused of operating as a massive, unlicensed money transmitter, deliberately evading US laws designed to stop money laundering. In late 2023, the hammer finally fell.
Yeah, just moments ago, the SEC filed charges against Binance and its founder, CEO, CZ, which he's known for. They're claiming that the Binance is functioning as a securities market, is offering unregistered crypto assets. And then the third point is misleading investors. Keep in mind that this is the largest crypto exchange out there around the globe right now.
Binance was hit with one of the largest corporate fines in US history, $4.3 billion. But the money was just the start. The real price was CZ himself. To save his company, CZ had pled guilty and stepped down as CEO. He was now a convicted felon, barred from running his own company and facing time in a US prison. Binance was crippled. It had lost its founder. It was facing mountains of fines, and its reputation was in tatters. It was a pariah, desperate for a way back to legitimacy. It needed a partner with powerful friends, a partner that could give it a clean slate. And it just so happened a new company was forming that needed Binance's power just as much as Binance needed its connections. Say hi to World Liberty Financial.
The Trump family is worth about $5 billion more today after launching a new cryptocurrency venture. Public disclosures show President Trump's family members hold 22.5 billion tokens of World Liberty Financial, which opened trading yesterday.
On the surface, they're just another financial services firm. But World Liberty Financial had a very specific, very ambitious goal. They wanted to create a new stablecoin. They called it USD1. See, a stablecoin is a type of cryptocurrency, but it's different from Bitcoin. It's designed to be stable by being pegged to a real-world asset, usually the US dollar. For every one stablecoin that exists, there's supposed to be one US dollar sitting in a bank reserve somewhere. But to launch a new stablecoin, you need two things: a massive user base to buy it and massive liquidity to trade it. World Liberty Financial had neither. Binance, even in its disgrace, had both. And so a deal was struck, an alliance. Binance, the wounded giant of crypto, would provide the platform, the users, and the trading infrastructure. World Liberty Financial would provide the legitimacy, a new, clean, US-based entity. But there was a third partner, a partner that provided the most important ingredient: the money. That partner was Abu Dhabi. Reports surfaced of a massive deal, a multi-billion-dollar fund backed by the sovereign wealth of the United Arab Emirates, all aimed at this new financial venture.
In the space of stablecoins, a lot of countries globally are looking to regulate stablecoins. DOE, the central bank, was among the first countries in the world to come up with an onshore stablecoin regime, which led to some of the banks, DOE, to start to adopt their technologies, their partnerships to launch their own stablecoins.
Think about what this means. You have a disgraced global crypto exchange, a new US company with deep political ties, and the bottomless wealth of a foreign kingdom, all joining forces. They weren't just creating a new coin. They were creating a new private global financial network, one that could move billions of dollars around the world, all under their control. And to understand why a US president, a convicted crypto founder, and a foreign nation would all want to control a simple stablecoin, you have to understand the technology they're built on. Because this coin is the key to the entire kingdom. Here's a secret about stablecoins. They are not decentralized. When you use Bitcoin, the network is run by thousands of computers all over the world. No single person, company, or government can turn it off. That's the whole point. Stablecoins are the exact opposite. The technology behind most stablecoins is built on a private blockchain. This means the issuer, the company that creates the coin like Tether, Circle, or World Liberty Financial, is the central bank. They have total godlike control. It's not like a public utility. It's a private bank where the banker has a master key to every single vault. The issuer can see every transaction. They can decide who gets to use their coin and who doesn't. They have the power to freeze your funds, making your digital money worthless with the click of a button. They can blacklist your wallet address, cutting you off from the entire system. And most importantly, they can print more. This isn't power to the people. This is the power of a bank, but with even less oversight and even more control. It's the ultimate tool for a new kind of financial surveillance. Now imagine giving that power to an alliance of political operatives and foreign sovereign wealth funds. They wouldn't just be able to track transactions, they'd be able to control them. They could reward political allies and punish enemies all in an instant, all on a global scale. This power is already being consolidated, and the biggest players in the game have already figured out how to make the US government completely dependent on them. To run a stablecoin, you need a reserve, a giant pile of money to back the digital coins you print. So where do companies like Tether and Circle, the two giants of the stablecoin world, park their hundreds of billions of dollars? In US Treasury bills.
Has actually created more demand for US Treasuries than Treasuries themselves.
Crypto is a great way for US administration to find new buyers of government treasuries.
I don't look at, USDC, Mike, as a crypto. Like this is literally just a vehicle for dispensing treasuries across the world.
Coins could reinforce dollar supremacy because with stablecoins could end up being one of the largest buyers of U.S. treasuries, T-bills.
I think the majority of it will be U.S. treasuries. In fact, what this will do, and the projections are by 2030, this is according to Citibank, stablecoin issuers will be the largest holders of U.S. treasuries in the world.
Let that sink in. These private, often offshore crypto companies have become two of the largest holders of U.S. government debt on the planet. Tether, by itself, holds more U.S. treasuries than entire countries like Germany, Australia, or South Korea. This is the real genius behind the system. It's how foreign investment now flows into the U.S. A business in Asia or Africa can't easily buy U.S. debt, but they can buy stablecoins. When they do, the stablecoin issuer, Tether or Circle, takes that money and is forced to park it in U.S. treasuries to maintain their reserve. It's a giant self-feeding loop. The world needs a digital dollar, so they buy stablecoins. The stablecoin issuers need a safe place to park the money, so they buy U.S. debt. This in turn helps fund the U.S. government and props up the value of the U.S. dollar. This is the system Donald Trump, World Liberty Financial, and their partners are trying to enter. They're not just creating a coin to compete with Bitcoin. They are building a private pipeline to U.S. treasuries, a pipeline that they control, a pipeline that allows them to skim fees from every transaction and gives them massive direct leverage over the U.S. economy. And if you have an outsized position in a system like that, you don't just ride the market, you make the market. Which brings us back to the recent crash. The market downturn that wiped out billions, the panic selling, the liquidations, the feelings of chaos. We were told this is just the natural cycle of crypto. But if you were a part of an alliance that had spent years building a massive leveraged position, a crash isn't chaos. It's a liquidity event. It's profit taking. Could it be that this new pro-crypto political hype was the perfect cover? A way to pump the crypto market one last time to draw in everyday people at the peak, right before the insiders decided to cash out. Donald Trump isn't just a crypto president. He and his allies are leveraging this new technology for the oldest play in the book to consolidate wealth and power. They found a way to merge the political power of the US presidency with the borderless, unregulated power of crypto and the bottomless cash of foreign nations. It's a new kind of conglomerate. And if you chart the rise of these political financial alliances, it matches up almost exactly with the market crashes that seem to benefit them the most. See, this isn't about left versus right. No, this isn't about Democrats versus Republicans. It's about a new emerging class of the ultra powerful who are building a new financial system in the shadows. A system where they make the rules, they control the money, and the rest of us are just here to provide the liquidity.
Sam tweeted, "At some point I might have more to say about a particular sparring partner, so to speak, but you know, glass houses. So for now, all I say is, well played, you won."
If you're tired of being a pawn in their game and you want to understand the systems, tactics, and strategies to build your own financial sovereignty, that's why we're building our digital product library. It's designed to give you the knowledge the insiders don't want you to have. Click the link in the description under this video to learn more. And with that, y'all know what time it is. If that money is digital, so is the hustle.